Next, we are having real talk, a real talk about fundraising, and fundraising in the cannabis industry, and specifically fundraising as women in the cannabis industry. No further ado, I'd like to welcome the next panel on stage. Maybe a little music. They can hear me. Yeah. Guys, there's a lot of empty seats up here. There's an empty front row. There's a lot of empty seats. So if you guys are in the back and want to sit, please.
I love your boots. She's busy. Yeah. Shall I begin? I'm like looking for someone to give me a wave, but I don't even know who I'm looking for. So I guess I'll just start. Thank you guys again for being here. I'm super excited to be on stage with these badass women founders and investors. I will say that I have been to a shit ton, excuse my language, conferences, and this is the first I have seen or been a part of that this investor conversation is made up of all women. So that's exciting. Yeah. Especially in today's society where our network is equivalent to our net worth, it's super important to have personal networks and professional networks. It's critical to founders' successes. So to create an environment and events where we can all come together and empower each other is super important, especially since a lot of investor relationships are made in places where unfortunately women and minorities are not, like golf clubs and cigar lounges and boardrooms and things that I don't want anything to do with, to be honest. So anyway, I'll let the panelists introduce themselves, but going down, Tahira Rehmatullah, Manager Director of Hypur Ventures, Erin, Gore, Founder and CEO of Garden Society, who's sitting next to her, Maggie. Maggie Connors, Founder and CEO of Besito, and Raeven Duckett, co-founder of Urban Society and Community Gardens. So if you guys want to say a little bit about yourself. Starting with you. Yeah.
Hey, everybody. Thanks so much for being here. And there really are seats up front. If people want to sit down, we won't bite, I promise. My name is Tahira Rehmatullah. As was mentioned, I'm with Hypur Ventures, which is a venture capital fund. My experience in cannabis has kind of been pretty widespread. I started a brand called Marley Natural several years ago, and that was kind of my first foray into the cannabis space through a private equity fund. And now I've been focused a little bit more on the investment side with Hypur Ventures. We started with investing in ancillary businesses and are now focused on our second fund that's going to be pretty widespread on both plant touching and ancillary businesses. And outside of that, I work as an advisor to quite a few different companies with a focus on female-owned and operated, minority-owned and operated businesses. And I'm actually on Maggie's advisory board, so small world.
Great. Hi, everyone. I'm Erin Gore. I'm the founder and CEO of Garden Society. We're a benefit corporation for women's wellness products and education. We're a licensed microbusiness, and we have a licensed cultivation in Mendocino. I come from corporate. I was 10 years in corporate. I ran a $100 million business, traveling all over the world, and fell in love with cannabis and wanted to give myself permission to feel okay using it and give myself permission to find joy with it. Realizing a big void, went ahead, found my purpose, started a company, and now we're going into our second phase of financing. So I'm excited to talk about the lens of being an entrepreneur and what it takes to fundraise and have an honest and authentic conversation about that.
Hi everyone, my name is Maggie Connors. I'm the founder and CEO of a vape company called Besito that is launching this month after 2 years of work, and happy to talk about that a bit, and of course financing. Before that, I was on the investor side, investing in cannabis businesses here in San Francisco. Before that, got my MBA from Stanford, where we tried to start a cannabis business club and were rejected. So it's really awesome to see this and be here today. And then I also came from traditional CPG and tech, Pepsi, Starbucks, Apple before that.
Awesome. My name is Raeven Duckett. I am co-founder of Community Gardens. We are licensed for delivery and distribution in Oakland, California. We were the first social equity team to be licensed by the state of California. Thank you. We've been in operation since the onset of the legal industry here in California. Currently, I founded Hurban Society, and I'm participating in a business accelerator in Portland, so that's where I spend most of my weeks. We're creating experience-based sesh boxes that contain products by underrepresented minorities. And we're launching our seed round within the next few weeks.
So Raeven, being a part of this incubator where the purpose of an incubator is to create businesses that are venture backable, why don't we start off with just the basics? How do you think through fundraising approach, and what do you need to prepare for it?
Yeah, I think what's most important when you're thinking about your fundraising approach is to put together your executive summary. I think a lot of business owners want to put together maybe a pitch deck or a business plan at the onset, but your executive summary is something really brief, but really gives a good overview of your business and allows you to communicate to potential investors and partners what you're trying to accomplish in the most quick and efficient way possible.
Totally, thank you. Tahira, do you want to add to that, especially back when we raised our first round at Miss Grass? Honestly, I had no idea what I was doing in terms of people were like, raise a seed round, raise an equity round, do a convertible note, do that. And these were all things that were new concepts to me. So do you want to break down the different types of financing and why one may think of going one over the other?
Yeah, and this is really, it's an art, not a science when it comes to how you decide to set up, your funding for your business. Debt, for all intents and purposes in cannabis, doesn't really exist. It's just an industry. It's not bankable, fully bankable yet. So that concept of having like all of these different financial instruments doesn't really exist. So it's really just been equity financing for the most part. And now it's gotten into more of the stage where you do see things like convertible notes and much larger convertible notes. But really it's more on the equity side, so straight, investors on your cap table who at some point in time, when you make money, they'll make money. And then there are these convertible elements which allow a lot of flexibility, and I think you guys probably explored all of this, where you don't necessarily have to set a valuation, and that's where a lot of these things get really complicated. You kind of have to have a floor to the valuation, a max valuation, all of these different mechanics that you may not be ready to actually put pen to paper on. And I think what a lot of entrepreneurs don't realize is like that's actually okay. And there are a lot of mechanisms around that, like as simple as SAFE notes, which is stands for a simple agreement for equity. Like that's what SAFE stands for, and that pretty much is like an IOU, and it's totally legitimate. So there are a lot of different options around that. So if anybody's thinking of starting businesses and you're really not sure how to structure it, just know that there are a lot of different resources. And actually for the initiative where Raeven was, we went through like a whole week of different options and then went more into depth. So if you have these accelerator options or business boot camps, it's a really good tool to use.
And you mentioned a little bit about valuation, and feel free anyone to jump in here. But that was something, at least going through the process at Miss Grass, I felt like it was one of those things that people were like, what's your valuation? And I'm like, how do you even come up with a valuation?
$100 million.
And it's like,
next. Yeah.
Literally.
It's really,
such
and
an
that's
art
kind of
to
what
science.
it is. And it totally is. I mean, the reality is a valuation. It is whatever somebody is willing to pay you. And you agree on with it. It's not the multiples that you apply in other industries. And I come from a finance background, so I would look at kind of these common valuation tools, and most of it went out the window on day one working in cannabis because it just didn't apply, or we didn't have enough information. It's changed a little bit now where there have been transactions with which you can benchmark against, or it's turning a little bit more into something that's comparable to consumer packaged goods or CPG. So you can look to some of those transactions and say, this is similar to that, so you're able to kind of pull in some of that information. But it's really, again, it's an art, not a science. It's a terrible thing to keep saying, because it's like, do we just make everything up? And the answer is yes, we totally do. But valuation is often like that. And sitting on the investing side, it's more on, we're looking at the entrepreneur, we're looking at the business idea, what kind of gap it's filling in the market, how logical is the revenue that you think you're going to produce. If you actually are revenue producing, then you're able to start basing metrics off of that. So it also depends on what stage you're in.
Right.
The number of PowerPoint decks that I've seen that are like pre-revenue and they're like, we're a $50 million business. And I'm like, you literally have not made $1 yet. And people are like, but we will be, you know, and those ones are the ones that are way more ridiculous. And to be honest, 3 or 4 years ago, people could actually get funding doing that because it was all so new. But now it's much more competitive, obviously. Like this kind of a conference did not exist 5 years ago. So it's refreshing.
Totally. Erin, you and I chatted last week or the week prior, and we were talking about the right time to actually raise. And for us at Miss Grass, we tried going out and raising money pre-company and had a little bit of success, but not too much, to the point where people encouraged us, just get live, use that, point to the product to then help to raise. And of course, there's different businesses that require different amounts of capital up front. But why don't you tell us a little bit about your experience and the time that you felt was right to raise?
Yeah, thank you.
Yeah.
I think it's really critical, if there's any way possible, to get an MVP, which is a minimum viable product. It gives you validation when you're talking to your investors. It also validates yourself. Like, is this really going to work? We've definitely pivoted from when we started Garden Society to where we are today. It definitely looks different. The concept is still the core, but the end product is different for a multitude of reasons. So if you're fortunate enough to seed it yourself, you know, that's a really great way to go and to build that MVP. When we were launching as a licensed business, we were really strategic, because you guys all know how much capital is required to obtain a license. We literally I went city to city, council to council, county to county. Where can I afford to pay rent to run a business? Where can I afford to have a city to write an ordinance that will be friendly to me? Where's the tax rate that's friendly to me? And use that as a decision maker to drive where I located myself, quite frankly. And so we rented 1,000 square feet in the back of this shithole and got our temporary license. We turned it into the smallest licensed microbusiness in the state of California, I'm pretty sure. But what it did is it allowed us to come to market. It allows us to become profitable. So we actually brought a product to market. We were scaling. We used a model of partnerships where we really took our strengths and then looked to others to help partner and be able to get us to market faster that way. And then we went and did our first raise. So that really allowed us to have a more honest conversation about our strengths, our weaknesses, what worked, what didn't work. And it also gave us a lot more credibility at the table with investors. They had more confidence in what we were going to do, and we had more confidence in what we needed, which I think is part of the equation as an entrepreneur. Like, what amount of money do you need and what do you need it for? And you need to be clear about that. And so I think that process, if you can do that, or if you can figure out how to partner to do that, is really critical.
Yeah. Did you guys on that side, I can't see anyone. No, I'll come out a little bit. Did you guys have a similar experience? I guess, Maggie, your business required a lot of upfront capital since you're more on the hardware side of it.
Yeah, so I definitely recommend not raising if you can. I think a lot of people jump to venture probably partly based on where we are here in Silicon Valley, but if you don't have to, don't. I was not in that position, and yeah, my business needs demanded capital and kind of hardware and vaporization technology development, but it's very hard to raise without a product, and an MVP definitely helps, and I agree it's important. To me, the top thing when you start raising is what milestone are you trying to get to? If you're raising venture money, you're probably not just doing it once, by definition, and therefore, how much money do you need to reach the milestone to kind of create value to take it to the next level, and then probably add like 20%, maybe 30% in cannabis.
Maybe 100, double it, whatever you think.
We'll take longer, and yeah, it definitely did for us.
Why don't you talk a little bit about, Maggie raised your first round 2 years ago when California was just medical, and now you're raising another round a year into rec. Why don't you talk a little bit about some of the challenges that you faced and now raising what investors are looking for or that you may or may not have at this stage?
Yeah, I mean, we've faced so many challenges. obviously a lot were external as far as the market changing from the end of this 20-year, extremely mature but lightly regulated medical market to, of course, the recreational market now. And being in that transition in 2017 was just super difficult to find the right partners, create products and brands and a supply chain without a clear set of laws. And so tons of challenges with the timing, and there was definitely kind of bringing our investors with us on that journey and communicating it to them and helping them understand the landscape, especially for those of them who aren't living it every day. A lot of global investors, even in New York. And then internal kind of changes too. We ended up rebranding and shifting our product strategy. But it's been interesting 2 years later on the investment side, now raising again ahead of launch, how much the landscape has changed. In particular, what I found 2 years ago in the cannabis investment thesis was all about kind of the licenses. And that makes perfect sense. It's kind of like we're creating the infrastructure for this entire industry. And it was, who's going to grow the plants? Who's going to move the plants? Where can we sell them? Who's going to make the brownies? And that was never really my angle. I was very focused on just brand and product. And it's been interesting to see now, 2 years later, I think largely with the mainstream rise of CBD in particular, and New York and Wall Street, and kind of it being more, it's not prohibition as much there anymore. And for my space in particular, on the consumer side, more interest and understanding of that as a play, and the same thing for every corner, more focus on software and media and kind of every more sophisticated investors looking at very specific corners of the industry.
I think just to jump in there, just because Maggie and I do talk a lot, the difference in a couple of months is actually like huge in cannabis. So like the end of 2018, the middle of 2018, everything was hot, all these IPOs were happening, and then everything started falling apart towards the end of the year, if you paid any attention to the cannabis stock, the stock market in general, but the cannabis stock market. And so people were skittish, and you just kind of had to wait, and then January, the tune was different. And I think, in Maggie's experience, and I think a lot of entrepreneurs that I talk to and people who are raising for their businesses, it's like you have to pay attention to that timing, which it sounds like just so much more like unnecessary that you have to do it, but it really makes a difference. Like fundraising in August is a terrible idea because most of the East Coast financiers are in Montauk and don't want to write checks, and then as people are approaching the end of the year, a lot of them have already deployed their strategy and don't really want to write checks at that time, and they're going to revisit their strategy in January. So there are things like that to pay attention to in your own cycle as you're thinking about fundraising, that you have to be really in tune to things that you never thought you'd have to pay attention to. And now that we have such a active cannabis public market, you do have to pay attention to that because it does impact the private market. And it shouldn't in the way that it often does, but it does influence investors in the way that they're thinking about the market. And, if they're losing their shirts on public deals that they've done, they don't want to write checks for private deals and kind of vice versa.
We tried to fundraise in August. It's real.
Yeah. People are at the beach, not me.
So
but
when is a good time?
January.
Yeah. October.
First quarter, honestly, in my opinion, as an investor, first quarter and fall. First half of the year is just a lot easier in general because people revisit their strategies kind of towards the end of the year, but the beginning of the year is when they start putting them into place. And kind of August is dead, September, October, and then November and December are out. So it kind of is a start and go process, but you get like 7-8 months that you can get investors' ears.
And are these things, Raeven, in the incubator, have you guys talked a lot about different strategies around timing and types of investors and things like that?
Yeah, definitely. We've been doing a lot of work developing our fundraising strategy and taking a look at our business in a venture mindset. I think that's something that a lot of my cohort had to really understand as we entered into the venture fundable world, was that it's actually a lot different. For community gardens, we didn't raise any venture fund, and so it was bootstrapping. It was a family business. It was a different feel. feeling. It was very emotional for us. And so going into the initiative and building Hurban Society, even though we have like a very strong diversity requirement, that's something that I understand is for me and for us and something that's important to me. But when we talk about venture funding, I need to kind of remove that emotion and talk about how my baby is actually like a money-making machine that's gonna like take off and make some investor a bunch of money, which is, you know, what they care about because they're investors.
I love that. Yeah, it's funny. Something that when I was fundraising at the beginning, I felt like I went in being like, please give me your money in order to create the passion in this business. And I felt like the vision and getting Miss Grass live was dependent on other people's money. And my co-founder and I had like a very conscious shift during our fundraising process where we looked at each other and we're like, we're doing this. Like, this is happening with or without them. And it was a slight energy shift, but it changed everything in our fundraising process. And we went into those fundraising meetings not only with like, hey, you in or you out because we're doing this, so jump on now or like we're gone, but also we went in being like, just as much as they're interviewing us to determine whether they want to invest in us, we're doing the same to them. Because at the end of the day, we're bringing them into the Miss Grass family, and are they the right fit? So really thinking through who the right strategic investors are. So when you guys think through that, and everyone, I would love to hear from you, how are you thinking about strategic investors and who are you looking for? Whoever.
Yeah, I mean, your story resonates so deeply with us because we had a very similar experience. So we were pitching, I'm sure Tahira would appreciate this. We were trying to raise $2 million in a Series A Light, we called it. And so we were pitching the big funds like, hey, I know you're trying to deploy $50 million, but can you give me 500? And so kind of learning what a strategic meant for the phase of fundraising that we were in was really important because it allowed me to build relationships with some of these more like larger scale investors. But my company was in infancy, so what they were looking for was very different than what I was or what I needed. So from, I think, knowing what they want to deploy, how much capital they want, how involved in the business do they want to be, as well as like when we broke it down, what we really needed were people in the Bay Area to help us accelerate our brand. And when we got really honest and authentic about that, our lens of who we wanted to talk to changed. We had a similar situation where the investors that we ended up with, we walked in there and I thought I was just having a chit chat, like, oh, we're curious how you're doing. And I was like, this is what I need. Oh, you haven't even seen my deck? Oh, here's my deck. Oh, here's my data room. Oh yeah, everything's all set. Here you go. And we had a really, I think, energy change and a really authentic conversation around exactly what we needed, and the deal was done in 2 weeks. So I think that's really important, understanding who and why and that strategic relationship. I also had a bad boyfriend of an investor. I mean, I'm married, so not like that, but I had an investor that I was talking to that really was courting me. We were courting him. You know, we were new to the process. And all of a sudden it started turning like a bad boyfriend crying in the bathroom. It got really emotional. And he said I was being manipulative. I mean, he got really impersonal and offensive to me. And I'm like, dude, like, we haven't signed any paperwork. And I think that's really important telltale sign. Like, don't get into bed with anybody that you don't like because you're going to be in bed with them. And I had the courage. No, I mean, it's funny, but I mean, it's really authentic. Like, I had the courage to tell him no. And I had 3 weeks of payroll left. And it was like, I had to have the confidence that, like, this was going to work. Thank you. And, at the end of the day, like, I see him in, like, Vegas, all the places we don't want to be, right? So I saw him, and it's just, I think it's really important to be, if it's not right in your gut, don't do it. Something, like, the world has a way, and you just keep trudging and you keep driving, but you will find it. Don't work with investors that you can't work with.
Right, and I think, Kate, you touched on something interesting. Is like standing in your own power as a business owner and understanding your own value. It's really intimidating to walk into a meeting with someone who can write you a $50 million check, and you're like, have 3 weeks of payroll. So you feel a certain way, but you provide a value, and the correct investor will see that value that you provide, and that's how I've been able to understand who to continue speaking with and who might not understand what I'm doing, and I can back away from the conversation feeling that, I've got my point across, but maybe it's not received, and that's just how it's going to be sometimes. And that's been something really tough that I've had to learn the hard way over the accelerator over the past weeks. But you do find those people, you do get those conversations where it's really mutual, and it feels awesome.
And it's gone through waves for me. Admittedly, there are times, I think, you know, as a woman raising, and I think only 15% of regular venture money goes to founding teams with a woman. So already it's difficult as a woman. You add the cannabis layer, and there's all kinds of funds and places you can't even go for, you know, institutional and LP reasons. So there are times when it's like, all money's green, but then at the same time, absolutely, you have to be careful about who you're bringing into your company. They're not your boss, but you will owe them answers. And then there are shifts to where it's become a bit of the opposite, and you look around at options and get to say, who do I want to help make money? Who do I want to succeed with our company? And that's kind of a more another layer of depth, and it can be a really, of course, mutually beneficial partnership, which is the whole idea, but it helps kind of bring you back in your power and what you're building.
So from an investment perspective, I've actually been on both sides of this, because we've had, not only have I worked in businesses that have had to raise money, but then with our portfolio companies for some of the businesses we've already invested in, we'll sit on the other side of the table with them as they're going through future fundraising stages. And we've been in situations where it's like all we want to do is get that one investor off the cap table because they are such a pain in the ass. Like they are, you know, they make things difficult. And so it's to all their points, it's like you should be thoughtful about that. You know, there was a point in time where there wasn't enough money to fund businesses in cannabis, and we're just not in that situation anymore. So I think from an entrepreneur's perspective, or somebody who's raising money for their business, you do have a lot of options. What's important for people who are raising money is to like know who you're talking to, because your pitch will not always be the same for every single person you're talking to. And if it is, you're doing it wrong, because you have to understand what is valuable to the other side. So, you know, as Erin mentioned, that she walked into a room where they write $50 million checks, right? You need to know what size checks do these people write, what stage are they investing in. A lot of funds only do growth stage, or they only do seed capital, and so you should know that. And you should acknowledge that you know where they are, even if you want to have the conversation. It's fine. I talk to a lot of companies that will definitely not be the right pair to invest in them, and we're not the right partner for them, but we'll have the conversation because we want to know them in a year or in 2 years. And so it's a long lead time to cultivate relationships. I'm sure all of these guys can tell you how long they've had to court investors because it takes a while. And I'm sure you guys probably had that experience too, where you're like, we should have this done in a week. And then like 6 months later, you're like, I can't believe we're still having this conversation. But things change, and it often, you know, will take that amount of time. So think about it in that way too, that, you know, there are different buckets and types of investors, and you should do your homework on them to understand what is it that is valuable to them, and how can you articulate that about your business to them. And, you know, I think that goes a long way too, and they'll know that you did your homework. They'll recognize that.
Yeah. You know, something that I really struggled with is this balance of going into these investor meetings with the attitude of like, I have everything figured out, fake it till you make it, we got this covered, and then the being transparent that like, let's be real, I'm figuring everything out along the way. And I feel like I've had experiences with investors where they like the transparency and are there to actually help us out, and we actually had an experience where we were in an investor meeting, actually one of our investors that's currently an investor in us, and love them, but early on they sat with us and we were figuring out a bunch of different things, and in real time working stuff out in this meeting with them, like, oh, you know, we're thinking about this, but maybe we don't do this, so then we'll go there. And they actually called us the next day and was like, it sounds like you guys don't have your shit together, we're really nervous over here. So what is that balance? How transparent can you be with investors?
So my opinion, and this is my personal opinion, is I like the honesty, but I've heard, you know, hundreds of pitches. So being able to kind of cut through to understand, like, does this person actually know what they're talking about, or is it kind of nonsense? I actually appreciate it when somebody's pitching me, and if I ask a question, they say, you know what, I don't know, but here's how I think I would address that. So it's like, you can think on your feet, but we don't know what the future looks like. I mean, this market changes every 3 months, right? So for me to tell you to tell me what this is going to look like in a year, like shame on me for doing that too, right? To put you on the spot and make you make up stuff. But I want to know that you can make up stuff thoughtfully, you know? Like that's part of the game. Is like, can you think on your feet? And you know, it's like, when I was in business school, you get these case studies thrown at you, and for anybody who's in business school here, you know what I'm talking about. And you kind of have to like think it out loud and figure out that structure. That's part of what I'm just looking for is like, can you think through this in a logical way that, you know, would make me want to place capital in you? And it's a good exercise. I mean, what I tell a lot of people that I do advisory work with is like, pitch to people and let them beat you up so you can kind of get prepared for some of this stuff on like how would you respond. Do you like freak out? Do you say something so ridiculous that it's like gives it away that you're totally making it up? Or can you like logically think through some of this stuff? And that's really half the battle. I mean, we as investors, depending on what stage of company, but particularly when you're an early stage company, you don't have to have all the answers, but you have to get to a point where I know the check I'm not writing you is not going to be just lost immediately, right? It has to have some kind of plan behind it. And I think some of it too, like, you know, if we don't know what's going to happen with the regulation, I'll want to talk about that with the person and be like, so what do you think your options are here? And if they have 3 responses for it, it's like, okay, good, you've thought through this in a variety of scenarios, right? And so I think it's important, and I'm sure you guys have been in situations like that where you have to address the unknown, and it's important to be transparent that you don't know, but I don't want you to not know so much that you're going to freak out when it happens, because then it's my check that you're losing.
Right.
And I think practice is the key, right? Like the more we pitched and the more we had the conversations, the easier it got. And whether it was the confidence I found to authentically answer, I don't know, or let me get back to you, or at least like I knew my numbers rock solid. I built a P&L from the bottom up. I didn't know how to build a P&L. I figured it out through mentors and advisors, and I could tell every projection how it got there and why. And so if I got a screwy question and I didn't know it, I could say, oh, I don't know that, but this was my logic to how I did it. So you might be right, but here's where it came from. And I think that the work to be able to answer those questions is the authenticity and the confidence that the investors need.
So we have about 3 minutes before Q&As, so last question. What is one thing you guys wish you knew or piece of advice you'd give when embarking on your fundraising?
I would say, because I'm so into my program right now, be ready to pivot, but make sure you're pivoting based on valid feedback, mostly from your customer base, and listen to that, but be ready to change what you're doing.
Which is so important in this industry, especially. I feel like we're pivoting every day, honestly.
I'm thinking about that kind of being comfortable in your own power, because not only is that so key, especially in the earlier days, as we're saying, where they're likely betting on you as the jockey more than the idea as the horse. And making sure that you're exuding that confidence that you should have, and that they are seeing that, because that's ultimately what investors are looking for. And again, you are creating something incredible, and really they are lucky to be part of that, and that ethos comes through in the process, and it can really be quite helpful in final investment.
I would say surround yourself by really great mentors and advisors. Like, I had no idea what I was doing when I started out on this journey, and I had some great mentors and advisors. Some were investors who I wasn't pitching for investment, but I was pitching for advice. And I think listening is the most important thing you can do, and understanding when to be confident and understanding when to listen to the advice. And you have those mentors bring you to a place where you can, you know, have a really honest conversation with the investors and actually become successful.
I mean, I can't reiterate enough how much practice you will need before you go do this, and it's fine. That's part of the process. You're going to get 100 no's before you get a yes. I mean, even for someone like me who's now on the investment side, I still have to pitch because I have to raise money, and I get told no all the time. And now I'm like, okay, we'll try again next time. You know, and but you get used to it, and I think you get better at the story that you're trying to tell. And I mean, to kind of all their points, you have to learn through each of those experiences. Like, you're doing yourself a disservice if you take it personally, and understand that, like, there's probably good feedback in every experience that you go through, whether they want to invest in you or not. in regards to the mentors, I think going into a business too, when you're planning this, there's certain basic things that you need to have. Like you need to have a lawyer. And maybe you don't have to engage them yet, but make sure that you have one in your network that you can call on, because you'll need that person way sooner than you think you're going to. Do not ever do a legal document by yourself. And you know, you can find lawyers that are a good deal at the beginning. Maybe they'll take some equity. There are different structures for that. So don't be deterred by the fact that they have really high hourly rates. If you don't know business basics or fundamentals and things like that, get a good framework before you go into it, because you're going to have to be responsible for a lot of those questions, for all of those questions. They're actually really great resources, not only like boot camps and stuff, but like Cooley Go is a website that Cooley is a law firm, and they have all of these resources for startups. So there are just things that, it's the internet, you can find anything. So teach yourself that kind of stuff.
Google.
And yeah, Google will tell you everything you need to know. And so, you know, using those resources in advance and getting smart on some of that and then putting it into practice is going to help you accelerate your learning curve as you're getting into a lot of this stuff.
Awesome. Thank you, guys. Does everyone have questions? I think there's a mic over there. We may need a, yeah.
Is this on?
It should
Can you
be.
hear me? Should I just talk loud?
Yeah.
So this question is actually for Tahira. So I'm an industry consultant. I work with companies that are pre-licensed, and one of my main roles is to find a valuation for them. So what do you do to handle pre-licensed companies that have a valuation?
So I look at a lot of, especially for California, because it's such a regional market, just understanding businesses that kind of pre and post license, what has happened to them. It's not like it's printed anywhere. It has a lot to do with just like putting yourself in the community and having the conversations. I mean, a lot of the information that I have is just through my network and asking people. I think that you kind of have to be out there looking at businesses that you think are similar and finding out just through relationships how that process went and what they're kind of doing in their revenue and their expenses. It's really the best way to do it. And unfortunately, it's, you know, there's no hard, fast like database or anything that has that. What you can also do is look at if you have info in other states, what has happened once they've gone into licensed structures. And a lot of that you can find actually in some of the companies now that have gone public in Canada that are US entities. They were all they have a lot of that information. So if you dig through some of that, you can probably back into some information that would be helpful for you.
So, more specifically, like new states, like for example, New Jersey or New York, that don't even have regulations for a recreational market, but we know that those governors are interested, and we have an idea of the market potential and things like that. I mean, do you have any input on if the valuation looks at the market and you have an idea, does that help at all? Or is that just like, you know, you're not licensed, we don't even know what the regulations look like, the valuation doesn't matter at all? Or does that actually have value on top of the unique selling proposition?
The state that you're looking at has value in itself, right? Like nobody knows what New York's model is going to look like yet. It's going to be very valuable because it's New York State, right? And a part of that is there are 8 million people in New York City who buy plenty of illegal cannabis already, right? So that's a real market. So when you look, it's a lot about population, consumption demographics, like look at alcohol consumption, tobacco, and not to say that those are one for one, but you're trying to look at these highly regulated markets and how those operate in those types of states, and that information is available, and you can draw very clear parallels to that, and that's really all you need. Like nobody's doubting at any point now that another state coming online is not going to have value. It's really based around the demographics and how much consumption you think you can apply to that.
Cool, thank you.
Hello, I'm Tiffany. I work for Ciclo. We're a cannabis compliance software company, and we have really good price models for small businesses, if anyone's curious. Ladies, I have one question, sorry. Let's see, Erin and Maggie, you said you came from a finance background, things like that. Our business partner also did, and we noticed that going from that financial background to the cannabis industry, there are a lot of things that need to be implemented for the way the investment proposals go and things like that. So my question is, what have you taken from the financing sector to the cannabis sector that you felt we needed to implement?
So I'm actually a chemical engineer, not a finance person.
Okay.
But relevant
Same,
is
same.
I really like dork. So relevant is I like numbers.
Okay.
And I work in Excel. It drives my business partner crazy because she likes Google Docs, and I'm like, what the shit is this?
Okay.
But I think it's all relevant, right? Like knowing your business and being able to articulate it into a way that's very simple and easy to understand. Having been in corporate, I ran a $100 million business, so fiscal responsibility was something I did. I started at the bottom as an engineer in the company, and I was promoted up within 10 years to that responsibility. So I think accountability and personal drive and motivation, and at the end of the day, the most important thing is grit in this business, in my opinion, because it's really hard. So you have to be passionate and purposeful, and you have to have a lot of grit to get through it.
Thank you.
And I was a marketer before, but bring a lot of those same skill sets, of course, to this nascent industry. And for us, that's been brand and product development, knowing exactly what our consumer wants and creating that kind of full journey for her. But at the same time, I think what's so exciting about this industry is, yes, we all kind of apply what we know from our previous, more legal lives. But what's exciting is we can rethink everything, and we can say, this is how it was done at Starbucks, but how should it be done? And how do we want to create it? And what values are we bringing? And I think that's a lot of the ethos today. And to me, that's the most kind of inspiring thing about all of us shaping this industry.
So you find yourself more in the latter position of wanting to reconstruct the industry rather than bring your more legal, previously industry where you come from to this. Does that make sense?
It's both.
Okay.
It's both, yeah. I think there's a lot of kind of professionalism, and in my case, brand and product development that hadn't been here before, but also not just doing things however they had been done, and kind of keeping our values and goals as an industry front and center too.
But I think having clean books is super valuable. So if your finance person can set you up with your books, and you know how to manage 280E, and you have corporate documents. I mean, Tahira can probably speak to corporate governance. So you set up you have bylaws and shareholder agreements, and you have all the important things you have to be a real company in California. That's as valuable as anything else, quite honestly.
Great. Thank you so much.
Hi. So I'm an investor coming in from a different industry and just sort of learning about how to invest in the cannabis industry. So from a kind of an investment standpoint, how do you think about the kind of unique opportunities and challenges of cannabis different to other industries? And then from an entrepreneurship standpoint, where are the bright spots? Like, what is super exciting in cannabis right now, where you think now is kind of the right timing versus the longer term burns?
Yeah, I think I'll start with that and just say that I think this event kind of shows how exciting it is to be a woman in the industry right now, to be a person of color in the industry right now. And like Kate was saying earlier in the opening, we have the opportunity to shape the industry, and you being a woman who's ready to invest is so powerful because we are at the onset of an industry that's going to look like something that we're not familiar with right now, but we know that if we have the right people building, then we have a better hope of if it's a lot of people that don't look like us building it. And so I think as an entrepreneur, like I said, with investors the same, I'm pretty new to raising money, but finding the entrepreneurs that you identify with and that you can get into bed with and date, because we're going to go through it together, because regulations are going to change. It's eventually going to be federally legal. What does that mean? And so it's all exciting right now, and it's just as hard as it is right now. But definitely, being a woman, being a person of color, it's a great time in the industry.
Thank you.
So just from the investment perspective, I mean, it's not that different from probably other industries that you've invested in, especially at this point in time where, companies do have data rooms. I mean, a couple of years ago, if you asked a company for a data room, their eyes glossed over, and they were like, I'd ask if they had a model, and they're like, what's that? It's come a long way, and so I think that you have more established kind of protocols and everything that are in the industry, so it's not that different. Where you're going to find probably your biggest road bump as a new investor in the space is that there's a lot of ambiguity in regulation. There's a lot of ambiguity in the direction of where the market is going because it's not fully established. And that varies not only state to state, but, county to county. And so you have to understand that you have to assess what your tolerance is for those types of things. It's why a lot of investors will tend to go to non-plant touching or what's called ancillary businesses versus regulated market plant touching, and why there's a differentiation of those policies. And that's something that you kind of have to figure out what's your tolerance there. And there's no wrong answer. It's just what can you get comfortable wrapping your head around?
Thank you.
Hi,
I think we have time for one more.
It's
I'm
a quick
looking for
one.
two more.
Oh,
Okay.
Cool. I've been going through fundraising, and it's been a really interesting experience because you talk to people in California, and they're extremely educated, and then we're talking to some folks who are from India, and there's so much education that has to go on. But I'm curious, from your perspective, where is their money right now, and how do we get access to those people?
Ding, 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 ding. Her name is Tahira.
I have no money. I have none. There's money in a lot of places. I mean, you guys are in the Bay, so it's all around you guys. So it really depends on what your business is, kind of what your strategy is, and what I've found to be more interesting now, particularly for cannabis and now hemp, is that it's no longer just funds that only invest in cannabis or hemp. It's just not, right? There are companies, so if you have a tech element, there are tech funds all over the world who are interested in it. If you're more of a consumer product, particularly if you're on the hemp or CBD side, which is now legal, those type of funds want to talk to you. Those types of investors want to talk to you. So, to be honest, this is not a great answer, but it's everywhere. You have to hone in on what are the elements of your business and your strategy that will resonate with different groups and identify those groups. So, you bring up India. India has a ton of money. They are very interested in cannabis, but they are actually really interested in hemp. And so that's, you start to understand what are these different regions. Like Israeli investors are actually really interested in technology and research. Because that's what their market is very supportive in the cannabis space. So you have to kind of go a little bit deeper in understanding the demographics of these types of investors and what they're looking at and how you can overlay on top of that and then go after those types of investors. And they could be like 5 different buckets, and that's fine. It's actually better for you if you diversify the type of people that you're trying to go after.
No more questions? Well, thank you, ladies.